welcome back. Well, the big talking point come Monday morning will be the fact how the IT pack is likely to perform, because Infosys has managed to disappoint the street massively with a 3.2% constant currency decline being reported in the Q4. This is the first time they have reported a decline in the last 10 quarters, and the decline is even higher than what we had seen during the COVID times. In fact, if you look at the company's performance, they not only managed to miss their FY23 guidance, but even with respect to FY24 guidance, there's a bit of a disappointment because they are projecting a growth of 4 to 7% when it comes to revenue, and the operating margin guidance is also disappointing because it stands at 20 to 22%, and that has opened the floor for the operating margins to be even 20%. Remember, in the year gone by, the operating margins were 21%, and the street was expecting an improvement in the margins in the coming year, but that really hasn't panned out. For now, the management is attributing this to unplanned slowdown and ramp downs in certain sectors, plus the fact that there has been some project cancellations, and they're hopeful that things have stabilized in the month of March, but the outlook still remains quite uncertain. Infosys has been trading at valuations of 21, 22 times versus TCS of 24 times, but after this disappointment, we have seen a massive derating. The brokerages across the board, right from Nomura, JP Morgan, Citi, Credit Suisse, Nirmal Bang, etc., have all downgraded the stock, and the target price have been cut by anywhere between 15 to as much as 30% for the counter. ADR has already reacted negatively to the tune of 10% in the last couple of sessions, and it's expected the stock is going to take a beating when it opens come Monday morning as well. But how should one approach the IT sector? We'll discuss all of that with a panel of guests. But before that, let's listen into what the managements of TCS as well as Infosys had to say post their earnings.
In Q4, we saw changes in the market environment. During the quarter, we saw unplanned project ramp downs in some of our clients and delays in decision making, which resulted in lower volumes. In addition, we had some one-time revenue impact. While we saw some signs of stabilization in March, the environment remains uncertain. This led to our Q4 year-on-year growth of 8.8% in constant currency and quarter-on-quarter decline of 3.2%. Our operating margin was resilient at 21% for the quarter. We had $2.1 billion in large deals in the quarter.
So, Samir, while we can judge the numbers by saying that, okay, it was the slowest quarterly growth in last 10 quarters, margins were under pressure despite the currency tailwind. One thing is clear, if I summarize by saying that next 2 or 3 quarters would be hard to call given the macro dynamism. Will that be a fair assessment?
To play it one step at a time rather than taking a forward view on it.
And it will be tough to get double-digit growth in FY24.
No, I would still aspire to get to double-digit. Depends on how it plays out.
Okay, let's discuss the IT earnings with a panel of experts that we have. Let's first go across to Girish Oai from Nirmal Bang. He's joining in to talk to us about what to make of the IT sector earnings. Girish Oai, thank you so much for making time and speaking with us. First up, from the earnings that we have seen from TCS as well as Infosys, do you see this to be a one-quarter impact or a one-company impact? Or do you see a structural slowdown happening for the IT demand in the coming quarters as well?
So I don't think it's a one company or a one quarter situation. I think it's going to be probably much more broad-based.
Santosh.
And I think in terms of growth rates, my sense is that it was not going to be just a March quarter or even a June quarter phenomenon. I think it's probably going to stretch for a few more quarters. So my view has been that we will see tier one companies grow in the 3 to 5% region, and this is a view that we've held since July of 2022. It's not a view that we kind of had recently. This is vis-a-vis consensus expectations in July of 2022 that tier one will grow in the low teen kind of territory. So subsequently, the consensus numbers have kind of come down and they are in the high single digit territory, or they were in the high single digit territory before the result season started. But I think consensus numbers still have to come down. My sense is that the worst on the macro side in the US is not behind us, it's ahead of us. So it's too early to call. I think the visibility on when the growth pickup is going to happen is a little poor at this point in time. So I would kind of continue to be cautious on the sector. Probably towards 2H of 2023 calendar year or 1H of 2024 calendar year would be the right time to look at these stocks.
Girish, there's also disappointment not only on the growth front but the margin front as well, right? The street was penciling in the fact that supply side issues are now abating, wage inflation is tempering, there's no big lateral hiring, etc. happening at this point of time, and margins will improve. How big a disappointment is the fact that Infosys has now guided for 20 to 22% guidance of margin in FY24?
Yeah, that's right, Anisha. I think the general street expectation has been that FY24 will actually see margins improve vis-a-vis FY23. But I think with the exit margins being lower than what street anticipated, I think the street is going to be a little cautious about what margins they kind of impute in their calculations in FY24. I think one of the reasons why the exit margins have been poorer has been the operating leverage, the negative operating leverage, because revenues have not grown as much as what street anticipated, or even the management's anticipated in one sense. So that is, I think, one. Next year, my sense is that, unless revenue picks up, I'm not very sure utilization is going to improve very dramatically, unless there is forced attrition. My sense is that there is going to be on-site wage hike pressure that's going to come through. My other issue with the companies will be pricing. So right now, when you discuss pricing with the companies, they seem to be fairly optimistic that they're going to hold on to the current pricing. In fact, Infosys even said that they are looking forward to price increases coming through in FY24. My take is that in the kind of pressured macro environment we are currently in, I would probably think that customers are going to push back, and very likely they're going to get some pricing cuts because the competitive intensity is fairly high. So some vendor or the other is going to kind of concede to price decreases, and then the rest of the pack will probably follow. So I am building in a little bit of price compression in FY24 estimate. So margin is going to be, a bit of a challenge in FY24 too, which is what we kind of built in. So both on the revenue side and the margin side, we've been more conservative than the consensus estimates.
Okay. Girish, I also wanted your view on TCS versus Infosys at this point of time. What do you think explains the sharp disappointment from Infosys versus TCS, which at least managed to report a 0.6% growth as far as constant currency is concerned? Because Infosys, of course, has more exposure to when it comes to digital transformation projects, etc. as well. And the expectation was that the valuation premium is set to narrow. Do you think that thesis is out of the window now?
Yeah, so I think this whole discussion around Infosys multiple should be better than TCS has been largely around the commentary that its revenue growth has been better than that of TCS. But if you dig deeper and if you look at EBIT growth has been broadly in line with TCS numbers. And that's because unlike TCS, I think Infosys has not been able to defend margins as much. So I would probably think that as we speak currently, Infosys is probably trading at a 10% discount to TCS, and I think the discount will probably expand because of the Q4 performance. So while TCS has not given any kind of guidance on FY24, it's very difficult for me to kind of call out, my take on growth for these two companies, that broadly they will be in that 4-5% territory in FY24. And that is based on our macro view that we're going to see a shallow recession in the US. If you're going to have a hard landing, I would probably think that those numbers too will probably see cuts. So my take is that Infi will probably trade at slightly higher discounts than what's currently trading at vis-a-vis TCS.
Do you think there's any company that might be able to weather the storm better if you had to pick the top bets from the IT sector? I know you have a negative view when it comes to the IT sector as a whole, but do you think any mid-cap company or any large-cap company would be able to weather the storm better than the others?
Yeah, so I'll tell you, you need to kind of separate fundamental performance from valuations. There are tier 2 companies which are trading at very significant premium to the tier 1 stocks. So if I look at the pack, I would probably think a Coforge, maybe a Persistent Systems will probably deliver better growth than the tier 1 stocks, provided we don't go into a hard landing. If you do see a shallow recession, my sense is that these two companies should show better growth than even a TCS and an Infosys. Obviously, the sizes are very, very different. That will probably that can be, that can be attributed to the growth that I'm talking about, the difference in growth that I'm talking about. But having said that, the multiples are also very different. Those stocks are coming at fairly expensive multiples vis-a-vis the tier one stocks today, which I believe are not sustainable from a medium to longer term perspective, because I think the growth rates are going to come off.
And Girish, just before I let you go, what would be your recommendation if and when the stock opens 10% lower on Monday? What should investors do at this point of time with Infosys?
See, Anisha, I just want to kind of state here that all these companies are great companies. I mean, they're great companies. They've delivered phenomenal, wealth for shareholders. If you take a 20, 25-year perspective, they've been great. The growth has been decent. I won't say great, but decent. The cash flows have been great. They've been good at corporate governance. They've been giving back a lot of capital back to shareholders. So all that is good. But great companies do not make great stocks. I mean, that's a thing that I would want to state here. So I would kind of still stay away if, say, Infosys comes off by 10%, because even at 10% down, my sense is that you will get a modest positive return, but it may not be a great return. That's my view. So my own take is that Infi will probably have to come off by maybe like a 20% number for you to make, say, a teen kind of growth from a return perspective.
So not being a buyer even at a 10% decline, because the expectation of growth or return from there would only be modest. But let's welcome on board Omkar Tanskale as well from Axis Securities. Omkar, do you expect a strong bounce back in Q1, or do you think the growth will come back only in the second half of the year? Because the Infosys management did point to a fact that there was a bit of an unplanned slowdown in Q4, but things are recovering. Your take?
No, definitely. I'm not expecting a strong bounce back in terms of revenue growth momentum in Q1 FY24. Why? Because the thing is that it's being, we are, everybody's listening or everybody's hearing that there might be a slowdown in the IT sector, but IT sector has started demonstrating the weaker kind of an execution after almost a year and so, or year or two. So there always comes up with a lag. I don't see an extreme bounce back in the next quarters. Maybe a couple of quarters. Maybe it will take to settle it down. Nobody knows how much the recession or the impact of the recession or a slowdown, or there will be a shallow or there will be a deep. So one can say if negative sentiments persist from the North America, let's say for the Europe, then there is a lower possibility of the spend. See, I believe these IT services are getting the deals, but the automation process, if they does not have the business, they will delay down the process for the automation. So they will not be able to bill it for the quarter or so. So there might be a couple of quarters that one should stick upon or should see upon to get a better development in the next couple of quarters. But if any positive news from the US or UK will help them to gain at least on the sentimental basis, but not on the earning part.
Let's welcome on board Dipan Mehta as well to talk to us about what he's making of the IT earnings so far. Dipan, what does this do to your thesis on the IT sector? And what does an investor do at this point of time with the IT pack? How should one approach it?
So yes, I think it's a bit of a shocking the way the Infosys numbers have come. And I think a lot of analysts will go into understanding what went wrong. But for the time being, I think it's best to stay away from the sector. The time to sell certainly is gone because the way the correction has taken place. And maybe, a couple of quarters more, the pain will be there and there could be a recovery soon thereafter. But some important figures like deal flow and all, I need to look at it more closely. But on the face of it, optically, I think, yes, definitely a disappointment. But let's take a more informed view once we have to know what the management has to say.
Okay, let's take a recommendation from Sandip Agarwal, the independent market expert as well. Sandip, what's your take as far as how the valuations are stacking up for the sector, because they have become a lot more reasonable, right? Though, however, this time around the disappointment is not only on the growth front but margin front as well. What's your view on the IT sector?
Yeah, so I think, the challenge is that we need to understand what they are building and what they are saying, because there is a very high possibility that, because there is an operating leverage also in the business. So when you try to scale, when your growth scales down from double digit to single digit, then obviously, there could be a hit on margins which cannot be passed on or which cannot be, recouped in short term, and it may take little more time. And I think that is what management would be building. But I will again, say that, post-COVID also, if you go and check data, management came out with very bad guidance and then they surpassed all numbers in a very substantial way. So Infosys always has a habit of, massively underguiding. So that should be kept in mind before, taking a very extreme decision or call on the counter.
Okay, on that note, we'll thank all our panel of experts joining us today, right from Girish Oai to Omkar Tanskale, Sandip Agarwal, as well as Dipan Mehta, to talking to us about how one should approach the IT sector, because come Monday morning, that will be the key talking point, and how the bulls versus bears is stacking up for the sector. But with that, it's a wrap on this edition of News Now. Thank you so much for tuning in.